have with us Yashovardhan Saboo, the chairman and MD at Ethos, joining in on the show right now. Mr. Saboo, great to have you today on ET Now. Morning, firstly. You know, you've seen strong growth momentum, and that's clearly continued in the fourth quarter as well. Tell us about what the demand trends are, and is there a slowdown at all when it comes to the luxury market? Because what one is seeing from, be it the travel trends, be it what the hotel data or hospitality sector data seems to be suggesting, there doesn't seem to be any slowdown.
Well, we've been seeing a very robust growth in demand actually continuously over the last 6 quarters. And of course, this has allayed any fears that the recovery that started, 6 quarters ago was, temporary or just a result of COVID ending, pent up demand. On the contrary, we see this as being sustained, and this is a symptom, or it's a sign of a very structural change in India in the buying of luxury, especially luxury watches. First of all, buying is shifting from outside India to India. It's shifting from buying unorganized to organized, and of course, due to the fact that the country's GDP is growing, it's above a threshold where discretionary spend takes off. We're seeing this robust demand. In a way, it's not surprising because this has been seen across the country, across the world, in many, many countries, and it's coming to India now.
What has changed after COVID that suddenly the demand for luxury is unprecedented? It's not that everything in the economy is doing well. It is not that only rich people are getting richer. But the difference in the demand, at least at the luxury end, is absolutely unfathomable.
Well, I want to say this, that it may seem as a kink or, a break that happened due to COVID and suddenly it's expanding faster. I don't think it's really that. Maybe COVID has contributed to, through social media, which took off at the same time, through people learning, especially young people, getting enamored with watches becoming a collectible. There are very few things, especially for men, that you can collect and keep for a generation and it still holds value. Several times it gains value. And these are things which are becoming popular because of social media. And I think that is what is the real change. Besides the fact that people got used to buying in India. People were buying expensive watches when they were traveling. But now they realize that buying in India is actually offering many advantages. The prices are competitive. You get all the papers. It holds value better when you have all the papers, and you get much easier after-sales service. So many, many reasons why this market is actually structurally changing for a very higher rate of growth than has been historically prevalent.
What are your top three selling brands, and what kind of existing relationship do you have with those top three brands? Are these relationships which are going to be multi-year exclusive relationships?
Well, without naming any specific brands, I think there is, in the public domain, there is enough information about what are the top brands globally. And in India, it's not really different. These brands, which are, the top 5 brands globally, are also among the top in India, if they are available in India. Some of these brands are not yet available in India. And our arrangement with many of these brands, if I go from, let's say, top 3 to top 10 brands of ours, in some cases, the relationships are exclusive. Of course, they are governed by agreements which are renewed from time to time, and in other cases they are non-exclusive. So we are a retailer, but in all those cases, we are usually or almost invariably we are the largest partner of the brand in India.
Mr. Saboo, hi. Let's also understand your outlook when it comes to the guidance, 15 to 20% same-store sales growth. Are you on track to maintaining this, or are you upping your guidance?
Well, we've had a very strong growth in Q4, and the same-store growth has been extremely strong as well. Over the next 3 years, we believe our goal is to grow at least 20 to 25% overall growth, not same-store growth. Same-store growth, I think, will rather be in the 15% range. However, a more specific guidance for the current year, I think we'll be able to give when we share the Q4 audited results. And I'm hoping it's going to be more than the average that we're going to keep for the next 3 years.
How does the margin picture evolve in a business like yours? Is it a fixed margin business, or depending on the brand and the category, the margins may vary?
Of course, they vary depending on brands. It's common sense. I mean, the best selling brands typically would have a slightly lower margin than brands that are not that well known. So there is a variation brand wise. And of course, in India, the overall margin is slightly lower than global margins for retailers, owing to the fact that we have a certain import duty to absorb, while the final prices, as I already mentioned, the final prices of watches in India are actually no different from what you'd find in a Dubai or a Zurich or a London or a Singapore. So in all the shopping destinations worldwide, the final prices are more or less the same. In fact, India may be a shade cheaper than most of the other locations. And you have to absorb the import duty. So it means that the retail margin is slightly lower than what it is internationally. But overall, yeah, that's pretty much the scenario. I think we are at a good wicket as far as the margin is concerned. You will see a growth in the margin over the last couple of years, and we are at a margin level which is probably stable now in terms of gross margins. In terms of operating margins, I think with operating leverage kicking in, we do anticipate the margin at the EBITDA level to keep going over the next 2 to 3 years, keep going up.
Would that go higher? That's my next question. So one is that you enjoy margins when you, those are margins which you get from the manufacturers, the watch companies. Second is that you obviously would have a flavor of your own interplay in terms of profitability, maximization, scale, and size. When you say that your gross margins will go higher, is this largely because you're expanding and that's the reason why leverage would kick in?
That's right. So our operating EBITDA margins are likely to go up because we have a pretty aggressive expansion plan. We're very excited about it. We expanded to 3 new cities in the last 6 months. In the next 9 months, we have another 4 cities and at least another 15 to 18 stores to grow into over the next 9 to 12 months. Hopefully, the new malls that we are in will come up in time. So we've got a pretty aggressive growth plan. And if you sort of combine that with the same store growth that we hope to achieve, we've got a good growth potential there.
Same store sales growth around 15%. What about the outlook in terms of, overall for FY23? Because you have seen a 35% growth. Is this looking sustainable for FY24?
Well, beginning of the year, we had given a guidance of 30 to 35% for FY23. And we're happy that we're actually up there and, we are beyond the maximum range that we had given. So we're at about 36.7% or something like that. For the next 3 years, we've set a goal of about 20 to 25% growth. The specific guidance for the current year, I'd wait until we do our Q4 full reporting, and I'm hoping that it's going to be more than the average that we've set for the next 3 years. So let's say more in the 25% range.
Quick word then on premiumization, whether or not that's reaching tier 2 and 3 cities and what your store expansion strategy is?
That's actually the most exciting part of all what's happening in tier 2 and tier 3 cities. We've got a very powerful internet engine, which is source of data. We have leads coming in, practically 80,000 leads a day. And a lot of these leads are now coming in from tier 2 and tier 3 cities, which give us a lot of data. There is interest in watches, and not only a few of the best known brands. There is interest and knowledge about watches, which is growing. And that is encouraging us to sort of make moves and establish stores in cities, new cities. So on the anvil now, 4 cities this year: Surat, Raipur, Kochi, and Bhubaneswar. We've already started in the last 6 months. Indore, Siliguri, and Bhopal. Bhopal actually we exited 5 years back. We're back there. And the stores are actually starting to do well, within the first quarter itself. So these are cities where we see a lot of potential. There is already a lot of wealth. And what has happened now is that there is interest in watches. There's knowledge about watches. There's a desire to know more about watches, collect watches. And this is an amazing development.
Okay, Mr. Saboo, great to have you on the show today. Thank you so much for taking the time out.